Papi, yo me siento acelerada, pégate más. Papi, yo me siento acelerada, siento que pierdo la noción. Papi, yo me siento acelerada, pégate más. Papi, yo me siento acelerada, siento que pierdo la noción. Papi, yo me siento acelerada, pégate más. Papi, yo me siento acelerada, siento que pierdo la noción. Papi, yo me siento acelerada, pégate más. Papi, yo me siento acelerada, siento que pierdo la noción. Papi, yo me siento acelerada, pégate más.
Here, check this one out. Isn't that weird? All right. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 traders. Yeah, I was showing you my watch, a magnetic levitation watch. Strange, right? Yeah, strange. So anyways, if you're a watch person, you're like, oh, that's cool. All right, hang on. I can't see all the data I'm supposed to be seeing. I have to move this over. All right, are we there? And then I got to move this. There we go. Yeah, all right, good. Now I got the tools. All right, so anyways, good morning. Hey, it's Monday. We just had a massive week. Oh my goodness, the amount of eco data that came out was just massive. And then so big that there was even political consequences to this. So people at the Fed quit, people at the Fed dissented, people at the Bureau of Labor Statistics were fired. Just like, oh my goodness. So much going on, so much to discuss, and maybe everything's changed. Or maybe it's just seasonal, or maybe something, but we're going to have a very interesting sort of consequential week regarding everything that happened last week. So, oh my goodness, strap yourself in. This is going to be an interesting, maybe bumpy ride. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, guten Morgen. My name is Wayne. This is me, in fact. Well, that's not 100% true, but well, that looks like me. And I'll be on your guide on this journey we call Forex. I highly recommend that you use TRADARS for your analytical analysis, which is kind of funny, isn't that the same thing? And execute through Trader's Way. TRADARS and Trader's Way. If you do that through us, you even get a reduction in your spread via a cash rebate. Oh, isn't that nice? Yes. So let's log in. and do our macro. Talking about macro. A newbie. I know nothing. Well, you probably know more than I knew when I first started trading. So good to have you here. So let's jump into our macro. What's going on in the world right now? Bitcoin down to 114. Dollar down. Holy smokes. It was 100. Remember that? Now we're looking at 98 and change. Potentially that will continue. Stock market got crushed on Friday. Gold. Money went into gold. Dollar down, gold up. Interesting, huh? Oil. Now, big drop here. We were tickling 70 and now we're at 66. But did you get the OPEC news? So that's kind of interesting. And monster madness. Monster day in treasuries on Friday. Amazing day in treasuries. Holy schnicker schnocker. Now we're at 4.22. We were at 4.32. We were at 4.44. Gee whiz. 4.22. Huge day. I'm loving it. Here's our hit list. There's our sell list. And of course, you can go into greater details. We already did this. We went through the risk gauges, scatter plots, money markets. Talked about that very specifically. Options market. We went through our heat map. We've done all of this. But let me just show you hot money. Look at that. That's Friday. Monster day. Let's get an update on the headline radar.
Swiss government says is not considering any countermeasures against the U.S.
Gold steadies as U.S. dollar stabilizes. Dovish Fed bets rise after soft NFP report. Oil prices fall sharply as OPEC Plus agrees to production hike. Russia sanction-eyed.
The U.S. dollar's little changed after the Friday fireworks from non-farm payroll Trump. Hassett, the data has been very unreliable. Oil falls as OPEC Plus proceeds with September output increase. Mexico consumer confidence climbed from previous 45.7 to 45.8 in July. Mexico consumer confidence S&A up to 45.9 in July from previous 45.4. Sixth Street takes 38% of Italian renewable energy firm Sorgenia in $4.6 billion deal. Crypto today, Bitcoin eyes $118,000, Ethereum $3,800, XRP $3,030 as speculative demand builds.
Cool. There's an update. Looks like Euro Yen's going to threaten the apex of a triangle. And there's nothing on the calendar that's worth your time right now until, well, PMI comes out of Australia. That's 10 hours away. So we don't have anything. Anyway, there's no threat there on the calendar. Just so you know. How was my weekend? Oh, it was fantastic. How about yours, Sebastian? Cool. And now another look at the calendar as far as volatility in the market with reliable, repeatable patterns. Tomorrow, balance of trade out of Canada. Wednesday, balance of trade out of Australia. Thursday, balance of trade out of Germany. Thursday, later that morning, we'll have the Bank of England interest rate decision. Then later that day, again, we'll have IVPMI. So Thursday's a big day. Friday, we have Canadian unemployment, aka Jobs Day. Trade, interest rates. Yeah. and then jobs. Big, 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 big. But, that there's not many of them, but it's interesting that we have all this data, because not only do we look um, at the vol created, but we look at the vol created if less than, if equal to, or if greater than. Then we look for reliable, repeatable patterns on every single dollar pair for that event. And then we say, these are the things you should look at and the other things you should not look at. Okay. Very quickly, let's eyeball the charts. Look at the move in Treasuries. That's Friday. Oh, loving it. And look at this. Down to the implied low of the day. Already Oscar Mike on the move, which you should know the best time to be trading this was about 2 hours ago, and you'd already be making money, but now. Cool. Look at that. Pig dog. Up, down, pullback, roll reversal, kick off the moving average, long and gone. Euro dollar, same thing. Up, pull back into the moving average, but hasn't taken off quite yet. We're in the implied low, going for a target high. Kiwi dollar, up, down, right? Roll reversal, Fibonacci off the moving average. We're in the implied low, trying to get to the implied daily high. So all these things are moving. Look at this. It's all working, baby. It's all working. So this is how you can very quickly update yourself on all the markets. But this is telling you what day of the week and what time of day and at what price levels and where to put your stops and where to put your target. Oh my God. This right there, that's worth the price of admission to TRADARS, in my humble opinion. But whatever. I'm done with macro. Let's move on.com. Euro. You guys ready to do some Euro? I thought I'd use a slightly different process today. We'll see how that goes. But let me set everything up for you. What do you think about euro dollar? And then later on our agenda, we'll do Bitcoin. And then we'll do the 10-year T-note. And then we will do gold. Okay? And then we will do the S&P 500. And we will only look for trending patterns for each of those assets on 5 different time frames. Now, you can have all the other assets. TRADARS watches 7,500 charts in real time. That's a lot. And we're only looking for the most reliable, repeatable patterns. In fact, we can throw all the patterns on. And see what's up. And you can very quickly get the data that you need to succeed. But before you start with the technical side of trading, what we should be looking at first is really on the fundamental side. Do you have a fundamental opinion on euro dollar? And how did things change on Friday? That's an even bigger question, because there's the short run and there's the long run. We have this issue in finance, but we have this issue in economics as well. So what would you think about the euro dollar in general? And then, of course, how does that change based on the monetary policy outlook in the United States of America? Well, we can't incorporate all of that. We can only incorporate what's happening now. And then as the opinion about the Fed policy shifts over time, then that will be reflected in the data. Right? So what we're talking about, we separate sentiment from the economic data. The economic data sometimes shapes sentiment, but then sometimes sentiment is based on how we think the outlook for the economic data is going to be. So, for example, you should know that a week ago there was a 60% chance, 64% chance the Fed was going to cut. It's now 85.5. Something has changed. But we haven't seen it in the economic data, just the opinion. Okay. So anyway, so this is how we break down how we feel about euro dollar. Well, it's actually not feel, it's think. So, right, like, let's put it this way. Let me go back to the new homepage. I did this over the weekend. And I thought this would be a helpful way to explain what we're doing here. Our sentiment radars indicate how does the market feel. Our fundamental radars explain what is the market thinking. And then the technical radars are a way to measure what is the market doing. Feel, think, do. They're quite different and can get complicated, and that's why we have performance coaches. Yeah. So going back here, like, ooh, this is a lot of data. So July to August is an okay period, but then it gets pretty nasty. So I'm expecting, normally, that euro dollar falls somewhere. It peaks out somewhere in August and then falls for quite a few weeks. Yeah. So is that happening right now? Maybe. But at least we know. Statistically, we can see that the trend has been down. Doesn't mean it is going to be down in the future, but statistically, we just measure it out. And you can see we got linear projections going several days into the future. How do we get to the conclusion of buying and selling? Well, we look at all this data here. GDP and CPI and NFP, unemployment rates, the changes, the interest rate differentials. Here's our PMIs, manufacturing and service, retail, right? Retail sales, institutional positioning, retail positioning. You add it all up, the market thinks down. But it's up. Yeah, it's up now. Well, yeah, we got some bullishness here. And based on the changes, that actually makes sense. And see, we updated our score last night. Retail changed their position here. Ooh, okay, cool. So it might be up today, but down the rest of the month. Are you ready for that? Okay. Okay. So Don says, well, how could we be bullish on when this, and this? All right, well, let's take a look at one thing. The market is 66% long euro and 56% short the dollar. So euro dollar up. But the thing is, that's absolute, but it's changing. It's changing. So on Friday, we were a 7. Now we're a 6. What if we're on our way to 5, 4, 3, 2, and 1? Well, that's why we want to look at this stuff. And then when I look at seasonality, right, I already have this in my mind. So you might be saying, oh, my goodness, right, Don? You're like, oh, my goodness, this is wrong. No. This is quantitative. It's just math. It's not wrong. That's the quantitative data. But as the data comes in, it shifts. Okay? So it's like, okay, seasonality is modest right now, but might turn negative soon. Yeah, well, you should know that's coming and you should be prepared. But we also just had a a change in some data. I guess I'm going too deep here, but I need to do this faster. But let me just show you like how much data we have. It's insane. Yeah, this is what I want to look at. Okay, look at the revisions that we've had since Liberation Day. And this is why the head of the BLS was fired, the Bureau of Labor Statistics. Okay. It was reported 228, and then they're like, no, sorry, we were wrong, 165. Then it was reported 177, and then they're like, no, sorry, we were wrong, it was 147. Then it was reported 139, and then revised up to 144, and then it was reported 147, and this is the kicker. They said 147, and then they had said, no, we were wrong, it was 14. These numbers aren't even close, but like that's off by 95%. And so what happens is the assumption of future Fed policy changes gone. And that would create US dollar weakness, in my humble opinion. So you might see euro dollar up, huh? All right, whatever. So we have that kind of data for every asset you trade. How does that make you feel emotionally, huh? Bitcoin. So we have that data for Bitcoin, but what about the setups? Bullish or bearish? What's happening right now? See, that's the technical radars. What are the markets doing? Right now, Bitcoin is consolidating, and maybe breaking down on the daily. So, if you want to zoom in, my little hack is to pop this open image in new tab. And you do technical analysis now. And you can say, well, it's still technically bullish here. Yeah, well, that's what this chart says. What the chart is telling you is that if we break that line from this top to this bottom, but definitely down to there, but let's say down to here, the bullishness that has been, because this is a bullish pattern, has been broken. And now it'll probably start looking for head and shoulders patterns. Okay? That's your classic head and shoulders. This is a classic crown. Same thing, only different. And so that's like, dude, consolidation, potential reversal. So you're either going to look to buy this dip or you're going to let it break. Okay. So again, let me go back. If you're a bull, see, this is not a sell signal. It's not a sell signal. It's not a sell signal. It's not a sell signal. So if you're a bull, this is interesting to you because if now on smaller time frames it turns bullish, okay, then we're just going to redraw the trend line. So get ready. But you have to confirm it with bullishness. Okay? It's not telling you what to do. It's doing pattern recognition and technical analysis on your behalf. So now let's say you're interested in, you're a Bitcoiner. You go to your charts and you pull up some Bitcoin. So let me open up my Trader's Way MT4 platform. Boo. Boo, boo, boo. Okay. and we go to our biddy. Biddy, 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 can't you see? Sometimes your trades just hypnotize me. All right, so let's clean this sucker up. And let's do, I don't know, how simple do we want? Okay. Here's an hourly chart. We can go a little further. And there's some of the support that we were eyeballing earlier. And you should, if you were still bullish, and many of you probably are bullish, as we approach 110, we've seen it's been appropriate or important in the past. Should you buy it now? No. No, you should not. Okay? So, here's the thing. If you're a bull, you would wait for these patterns to turn bullish, in particular on the shorter term, 15-minute, 30-minute, 60-minute. So now you can just sit here. Is it bullish now? No. Is it bullish now? No. Is it bullish now? No. And then, if you're correct on your direction, what'll happen is suddenly 15 minutes will do this. And now you got a bullish trend. Right now it's consolidation. What about the 30-minute? Yeah, it's not ready for up yet. So not yet, not yet. And this shows the threat to the downside. So it just takes seconds. There's nothing on the 60-minute. There's nothing on the 4-hour. So now I could just sit here and I want to buy Bitcoin, not now. I want to buy Bitcoin, not now. I want to buy Bitcoin, not now. You're like, what? The thing is, when we look at it fundamentally, we're also neutral. Ha ha! Ha! Yeah. Retail's long, so they're suffering right now. Okay? Check this out. August to September is usually not a good period for crypto. Whoa. Okay. So it could be down for a couple of weeks. But I don't know what the future is. I only know what the past, and that does not predict future results. But you better know what you're doing. Otherwise, you're Mr. Random. Yeah. So how do you think about treasuries? Do you think it matters if money is moving into the 10-year T-note or down? Do you know if it means anything to people? Why do we care about treasuries? Well, we care about money flow, capital flow, cash flow. Yeah. Now, in particular, foreigners are buying our treasuries. That does one thing. Okay. But if Americans are doing it, it doesn't change anything. So when we look at here, I've asked TRADARS to analyze the 15-minute, the 30-minute, the 60-minute, the 4-hour, and the daily chart, looking for all kinds of patterns. Only one exists for the Treasury. It's been consolidating since April, but there was a massive move. Here it is. There was a massive move on Friday. Massive. So we went from the bottom of this range to suddenly a massive spike. Caught our attention. So we're here. Okay. And the price went from, we'll call it 110.5 to 112, 112.5 in a day. That is crazy, bro. Crazy. Money went into this market jacking up prices a lot. Right? Wowzer. What does that mean? Yields have dropped. What does that mean? This market, which is a very, very liquid market, is very, very important to institutional investors and to all finance companies. It's a benchmark in many ways. Here's the thing. It impacts everything in the economy. And when you see a dramatic move like this, the assumption is that the Fed's cutting. So you could assume here the market thought the Fed was cutting. The market was going to cut. The Fed's not going to cut. The market's going to cut. The Fed's not going to cut. Right? The Fed's going to cut. The Fed's not going to cut. The Fed's going to cut. The Fed's not going to cut. The Fed's going to cut. The Fed's not going to cut. And then at some point, you get a real direction. And yesterday or Friday's move was so dramatic that we need to start wondering at some point, is the Fed actually going to cut? What's going to happen next over the next few days, next few weeks? And we're measuring this with hot money. And if that's the new trend, you need to get in on it, my friend. And does this impact the stock market? Does it impact the currency market? Yeah. And I'm building a tool to outline. So all of this will be built into TRADARS. But is this meaningful? In particular, if it does it this week and we breach this, then this consolidation pattern goes away. Because right now, this just shows consolidation. So if suddenly we're making a higher high, higher low, the pattern will change. And this is what TRADARS is doing for you on 5 time frames. So like in Bitcoin, you'd be waiting. If you were a bull, but the markets were not bullish, you wait until the markets are bullish, and then you start trading. Yeah, so Don Pablo, we're back around the other way. Okay, so anyways, I want you to be able to do your fundamental analysis and make decisions long term, and then line up what is actually happening, which is much more short term. And even if you're going to trade against your long term bias, I'm okay with it as long as you know it's short term short, but you're long term long. As long as you can know based quantitatively, then you're making decisions. That's all I care about. So you're like, well, it's August, so I'm going to take it down, but in September, I'm going to buy it all back. Brilliant. That's what TRADARS does. It removes all randomness. So there you go. So you're like, Wayne, I don't trade the 10UT note. Hey, do you like money? Do you trade money? You like the stock market? Do you like gold? Do you like oil? All of these are just different forms of money, really. They're not very good forms of money. I don't want to figure out how many eggs a barrel of crude oil buys, but I can probably sell crude oil anywhere in the world. And you're like, aha, I got you, Wayne. Well, not if it's Russian oil. Well, how do you know it's Russian oil? The bill of lading? You kidding me? Open up the barrel. Tell me where it's from. Well, actually, you could probably do a pretty good job of that. You're like, I could tell you that's not Nigerian, and I can tell you that's not Saudi Arabian. Actually, you could probably do that, but you couldn't prove it's Russian versus Uzbekistani. but whatever. So anyway, so this matters, this flow of capital, and this is what our job is, eh? Oh, well, Abdul, you could ask. So what is it that you're asking for? But of course, Abdul, the other point of doing this is so that you see how amazing TRADARS is, and you sign up and you pay for it. And there's hours of performance coaching every day. Like, we can sit together and we can fire off yen trades and analysis as much as you want, right? It's not that it doesn't exist. I can't sit on YouTube for 9 hours a day. I got things to do, right? So pay the money. Okay. Have access to an entire trading team and have all the tools. Just pay the money. Oh, actually, and that reminds me, I don't even know what the link is. We have a new service that's on super sale right now. Yes, I should mention it. It's a cheaper way. This is what I'm getting to. So, Abdul, let's say you don't have a lot of money. Let's say you don't have a lot of money and you believe in the power of what I'm doing. I have a more affordable way of doing it. But I have to I have to find, it's a special hidden page. I don't remember what the URL is. All right, I found it. Oh, I have to get it with the. So it's not only significantly cheaper. I actually have a built-in coupon code that I think still works for another day or two. So hang on, let me get that now. And now I realize I have to go to another place. Where do I get that stuff? Oh, here it is. Hang on. So Abdul, how about $300, not a month, but how about $300 a year? Okay. The thing is, and here's the difference. It's mobile access only. Yeah. What do you think about that? Now, what it's showing you is when the COT report comes out, you get emailed. When there's technical changes, you get like 12 technical charts a day. I'm building a version of TRADARS that's completely focused on mobile only, so that you have euro dollar scorecards that, right? Here's your COT report. You're emailed 1 minute after it comes out, and you now have a summary. Score flips. As soon as they happen, euro dollar just went down -1. You will be informed. Okay. The thing is, it's only the mobile version, and it's going to be very significantly more expensive in the future. So you're on the beta test team right now. Yeah. What do you think of that? So if you sit at your laptop, you'll have to have your phone in your hand, or you could sit up your laptop and pay for TRADARS base Okay, the base. Okay, and you see that trial? The trial's gone. That's it. You missed it. That was Friday, Saturday, and Sunday. I only sent out, 2 emails or something, right? So anyways, it's done. It's $300 a year. It's going to be jacked up to $1 a day soon, and then I have news that I can't tell you about, but there's going to be significant upgrades to this service, and this price is going to go up again. Probably very significantly. Meaning like $500 or $600 a year. So anyways, that's that. That's that. Okay. So on Friday, as soon as the Commitment to Traders report was released, I got an update on the summary. So you could be walking down the street, your phone goes bling, and you look at it and you just got updated on the COT report. Done. So I sent out an email, do the Commitment to Traders report in 5 seconds. So there it is right there. The COT report. Boom! It comes out 1 minute after the release, and you're already informed and updated. And you're sitting at Starbucks drinking a dirty chai. And you're like, oh, cool. Did you see that flow into yen? Wow, that's amazing. Done. Okay. So the trial, the 4-day free trial, that's gone. I told you I'd remove it. I think it's tomorrow. I don't remember, but I think tomorrow the $66 coupon goes away and you pay $1 a day. If you don't do that, then probably in 2 or 3 weeks, this will go up again. And then probably a month or 2 after that, it'll go up again. Oh, wait, you don't see anything? After all of that, hang on, where's the software? I'm sorry. Dude, that sucks. Too bad, man. And I had things overlapping. I have too many windows open. Sorry. There we go. So here's what the mobile version will look like. You can scroll through it. You have your buy list and your sell list, your scatter plot, what the markets are doing. You'll be able to pull up euro dollar scorecard. This is your COT report emailed to you in real time. This is score flips in real time. Okay, this is market summary score flips. So you know what to do going into the market. Once a day, you're going to get technical charts sent to you. I'm building all of that, Lewis. So you're getting real-time alerts, pre-market open alerts, and then you're going to get access to a completely new version of TRADARS that is being built from scratch. I probably even still have it open somewhere. This is actually it. This is not TRADARS. It says QuantBox because that's the old. I took the old version and created a whole new version of TRADARS that will only work on your phone. I'm not zoomed in. I'm not zoomed out. That's what the new chart looks like. The new platform looks like. So imagine you'll be on your phone. Here's Euro Aussie. You're like, man, right? What's Euro Aussie up to? That's what's going on. Okay. So you'll have all of this on your phone. Isn't that cool? Well, what about USD yen? What's going on yen? Okay, see, it works. But this is not the TRADARS site. I had to rebuild it all from scratch. Every calculation is a new calculation. There's no cut and paste. Like, it's insane. And some of these things need to be tweaked. Like, this isn't actually working. There's no data. So it's not connected to our risk gauge tool. So we have to rebuild it. And then gold and Bitcoin are not connected. The 10-year T-note's not connected. So we have to rebuild it. I'm not sure if these numbers are accurate. Yeah, but I think they might be. Yeah, 65. So these are hooked up. Here's our scorecards, your buy and sell list. All right, they're overlapping. All right, well, we have to fix that. This is live. Look at the price of oil. Okay, this is live. So some of it's working, some of it's not. But, dude, it's happening. And then I got another very significant upgrades in my mind. And I'm talking to a new development team that can take this to the next level. But you're not going to get that for $299 a year. You understand how expensive this is? Like, yeah, I have to redo all of TRADARS because you can't make a database mobile responsive. So we have to just make a mobile version. But I'm doing it. It's happening. If you want to support my vision, get involved. Just pay the money. It's only money, bro. So again, to Abdul's like, you don't cover yens anymore. I'm like, well, why don't you just pay the $300 and do it whenever you want? So what do you want? What do you want to know? Well, I want to know euro yen. Oh, you want to know euro yen? All right, let's take a look. Oops. There it is. That's what I meant to do. All right. So let's take a look at euro yen. See how big my phone is? Well, what if this was your tablet? Okay. So anyways, let's make it a little zoom. Euro yen. Okay. We have linear projections down to 69.89 in the next few days. We are neutral. See, some of these are a little buggy. This says -1. This says 0. There's something off on some of these. We just have to figure out which table. There's millions of tables. Not tables, but which cell on. So we have thousands of tables from dozens of data sources with millions of cells. One of the cells is off. So we have to find out which one. All right. Well, that's complicated. But once it goes from neutral to bullish or bearish, then it starts doing some calculations, right? Here's our seasonality. Cool. Here's the data, Europe versus Japan, and how we get to the conclusion. So GDP, inflation, jobs, and interest rates. You'll have access to the commitment to trader report positioning. 68.99% of institutional investors are long the Japanese yen right now. Cool. But 66.48 are also long euro. So euro yen may not be the best thing, and retail is heavily short. Interest rate differential, there's your carry. Okay? So like this is working. So I will be releasing this to you very, very, very shortly. I want to fix those little bugs. But this is done. If you like what I'm doing, get involved. Don't just, right? The price will be up where, I don't know, $50 a month, let's say. $59 a month, let's say, versus $200. So it's going to be a great deal. And then my vision is that we'll make it an add-on for those that are paying for the desktop version. I'll make a cheap add-on so you can have both for cheap. But this is also a way for those that don't have a lot of money. You're like, Wayne, I want this data, but I just can't do it for $200 a month. Well, then give me $50 a month. Yeah, of course it is. Dude, if you understand how complicated it is, that's stupid cheap. So I'm trying to make this accessible for everybody. My goal is for everybody here to make logical, intelligent trades every single time they trade. No randomness, no guessing, no feel, no think. It's you've made quantitative decisions, and you're at every trade you make. Well, they may not be profitable, but they're well thought out. I want you to have the world's greatest strategy, and then be able to have a coaching team to help you execute it. So I want you to stop trading like an amateur that makes emotional decisions. How do you feel about euro dollar? Like, I don't even understand how to answer that. What do you mean, how do I feel? Why don't we look at institutional positioning? Why don't we look at seasonality? Why don't we do linear projections on the charts? Why don't we use pattern recognition? What the heck do you mean, feel? How do I feel about gold? What a dumb question. So we're going to end that. So if you think this way still, or still ask me questions, we're going to put an end to that. I don't think or feel anything about gold, but I do want to know quantitatively what's the institutional positioning. What does over 20 years of analysis, what does that analysis tell me what gold usually does in the months of August and September? Oh, a false rally in August with a collapse in September? Dude, I know that that's not necessarily what's going to happen, but I have 20 years of data that tells me what normally happens. What do you mean think? What do I feel about gold? All I know is it usually goes up with a big crash. Oh, well, I'm going to incorporate that into my strategy before I even look at a chart. So now I could be long-term long, but short-term short. Cool. Then I have to well, what about monetary policy? What about changes in monetary policy? What's the bond market doing? What's the stock market doing? We have all this data at our fingertips. There's no longer feel or think or your favorite. Oh, my favorite is Euro Swiss franc. Who cares? You're supposed to be doing what is working. I want you to look at the right thing at the right time for the right reason and have the strength and fortitude to execute the trade as it's supposed to be executed. Oh, Asamu, thank you for that. Yes, I will have, let's talk about that. Hang on. I have so many things. I spent over the weekend, 15 hours a day working over the weekend per day. Hang on. And I came to a decision when it comes to what I'm going to do for summer school. Okay. Well, okay, good. And so one of the things I did is I thought about what I want to teach, right? And I've been thinking about this a while. So I know what I want to teach. And then it's like, how do you put it together? And then I thought about redoing the entire course. That was the idea, right? Redo the entire course. That usually cost me a few $1,000 because I have a PhD that helps me. And okay, so I build a course. And I thought about, okay, I'm going to redo the entire monetary policy and central banking course from scratch. I did one 10 years ago. And things have changed in the world. And I'm going to redo the entire course. Okay. So I thought about that, and I have some idea. And then I'm like, well, okay, I want to look at the way I structured the old course and see what process I want to keep and what process I want to change and how I want to explain things, right? And so I started to take the course over again. The course I did 10 years ago. And I started watching the first video and I'm like, okay, well, it's kind of amateur. Yeah. And then, I start listening to myself and I'm actually like, okay, well, it's not pretty and it's a little amateur, but dude, the information's pretty good. And then I skip ahead. I'm like, I'm really taking my time truly explaining these concepts. So then I watch some of the next video. I'm like, dang, this is good. Then the third and the fourth and the fifth and the sixth. And there's like 12 videos. It's like 15 hours. And I watched, 10 minutes of each one. I'm like, damn, this is good. It's not pretty, but it's good. I'm like, I don't want to change any of this. I can't make it better. I mean, I could put lipstick on this thing, but what's the point? I don't want to spend 1,000 hours and $10,000 of my time to do something that already really kicks butt. So I'm like, I like this, but I need to update it. So I've decided not this Wednesday, right? Or is it this Wednesday is the quarterly outlook. The next Wednesday, we're going to do summer school. So two Wednesdays from now, I'm going to do an update. And I haven't decided on quite on pricing and all that, but cheaper than it was going to be by far. I'm going to do one, maybe two update videos to the monetary central banking policy or central banking monetary policy course that's already at Investor Bootcamp. And so I've already put some thoughts together and built sort of the page for it. But, okay, the landscape of central banking has undergone a dramatic transformation over the past decade. The extraordinary expansion of the money supply, $1 trillion after the 2008 Great Financial Crisis, and a staggering $5 trillion following the COVID-19 crisis, has rendered traditional monetary policy mechanisms increasingly obsolete. This unprecedented liquidity has forced central banks to develop entirely new frameworks, many of which haven't even made their way to university textbooks. For Forex traders, understanding these evolving mechanisms is no longer optional. It's essential for navigating today's market's dynamics. And so I'm going to review the old way and then give you an update on how we got here and then take you through the new way the Fed is working right now, when quite literally there's too much money. So anyway, I did this over the weekend. And so I'm going to tweak and all this. And so in one or two lectures, so let's say somewhere between an hour and a half to 3 hours, I'll teach you the new ways monetary policy works. And so there's going to be two frameworks at the Fed when there's way too much money in the world and when there's not enough money in the world. Usually there's not enough. But what's happened since I made the course would never have been thought of. The situation we're in has never happened before. And so a lot of the stuff, fractional reserve banking, doesn't exist anymore, not in the United States. But we will probably sometime in the future, God help us, we'll go back to the old way. So now you have to understand both ways. And so I decided to just do an update. So maybe you'll throw in $50 or something, and I'll put in that time, and we'll create this, and then we'll do that. So that'll be in 2 weeks. What do you guys think of that? See you, Sebastian. Does that seem fair? Okay. Well, okay, Della, it's not that things are wrong now. It's that there's a new scenario that's never happened in the history of the United States, and there's a second framework added. So it's like an addendum. Okay? So the book is still good, that just needs to be added to, right? So am I going to write a second, strategic and tactical Forex trading? No, man, I got better things to do. But let's add to the course. So I went to the Fed twice last year, right? And I got this information. Okay. All right. So let's put it this way. Hang on. Let me change this. There we go. Sorry. All right. So let's change this. Okay. I went to St. Louis. I got the pictures. I got the name tag and the lanyard. Is my name tag still in here? No. But anyways, here it is, right? Like legitimate. I'm going to teach you this stuff. I spent about $3,000. Is $50 fair? I'm going to have to spend about 20 hours of putting it together on top of the investment I've already made. There's some good stuff in here too. I mean, maybe I'll make some changes in the future. But is $50 fair? Like, if you don't care, then don't pay the $50. And if you don't care, no need to do it. Yeah. It's a cool thing, right? I think. So I geek out on all this stuff. So the central banking evolution is, Denise says very fair. How about $99? Yeah. Yeah. It's not like I'm going to make any money, but it's like, dude, show me you care. But whatever. So that's what I'm thinking. That's what's going on. So on Wednesday, we have the third quarter update to our annual outlook. The following Wednesday, we'll do the central banking evolution. You know what, Denise, maybe what we'll do is I'll say $50, but if you want to pay more, you can pay more. I think there's an option where I'm like, dude, just chip in, right? But whatever. It sounds like I'm begging. I'm just like, I need to know, like, do you even care? If nobody cares, why should I waste my time, right? But I think some of this stuff is, I mean, how does the central bank work? You should probably know. But anyways, yeah. So I don't know. It's one of those things. So we got a busy week. If you're in my Council of Investment Advisors, we have a meeting at noon. I have many thousands of dollars in cash that needs to be addressed. We have potential rotation possibility and rebalancing. We have possible hedging, and we can hedge through various instruments like options, or we also, I mean, there's lots of things we need to discuss today at noon. And for those that don't understand what the CIA is, About a year and a half ago, I put $50,000 into a real account, and I teach the CIA how to build and, well, construct and manage a portfolio like a hedge fund manager. And we're using advanced derivative strategies, investing into the stock market and the Treasury market. And our goal is to lower volatility and risk as much as possible and produce a high level of income. And we've beaten our goals. And the account is now, and I laughed when it happened. About the middle of last week, it hit 99,700. And I said this in one of the live streams. It's going to get 2 shakes of a lamb's tail away from 100K, and then the stock market's going to collapse, because we knew it's coming. And then now it's down. Well, we're invested in the stock market. How could it not be down? It's just down less because we constructed it properly. So anyways, it's just, you just know it. So we have that to do. We have such an amazing day. And then at 4 o'clock this afternoon, I'm doing the day trading group. So some of you guys are going to be sick of Wayne because you already spent an hour and a half with me before this event. Then you've spent, an hour and a half here with me. And then we're going to spend at least 2 hours doing the CIA and then another hour of day trading. Like, dude. But this is why I'm on your team. That's how I look at it. You hire me to be on your team. Your small institutional trading and investing firm. And it's a real honor and pleasure serving you every single day. Peace on earth. May the pips